This is the Friday, March 13, 2020 version of the Market Plus segment. Joining us now, Tomm Pfitzenmaier and Matt Bennett. Gentlemen, hello.
Howdy.
Hello.
All right. Tom, you're right. I'm not normally a negative Nancy, but I really felt we just spent 14 minutes in the market-to-market television program. It was pretty dire, right?
Yeah.
I mean, I'm going to get to a question in a minute. Is it, Matt, either of you, I guess, can answer this one first. Was that the appropriate tone that we should have taken? I mean, I don't want to sound alarm bells, but Matt, I also think we got to be realistic.
Yeah, and like we talked before, a lot of times there's things, especially in agriculture the last several years, that aren't much fun to talk about, but it doesn't mean that they're not going on. And so we all have to be cognizant of the situation we're in. We have to have a plan. Worst case scenario, what if we have 180 bushel corn with 95 million acres this year? We all know that that's going to cause a price reaction that's not going to be bullish. But what's your plan if that's what happens? We got to talk reality.
Tom, there's nobody traditionally in the show, this history of this show, it's more real than you. How are you?
You mean negative?
I didn't say that. That's not what I said. You interpret it that way. But I mean, frankly speaking, you had a lot of company this week.
You got to be. I mean, you got to be realistic about what the situation is here. I mean, I think we outlined pretty much what it was. I don't know that we overdid it. In my mind, it's a problem and it's going to have to be dealt with. But and some of it's because of the coronavirus, some of the negativity of the equity market, but some of it's because of overproduction. And I think you have to understand that part of it isn't going to go away very quickly. The coronavirus part of it probably will diminish over time here, but that other part's not going to. So you got to remember that, keep that in mind when you're developing a marketing plan and trying to figure out what you're going to do going forward on marketing your products.
All right, since Matt Bennett primed the pump on all questions from people named Matt, he gets the first question. Matt in Haverhill, Iowa on Twitter, Stalzer20, he says, Matt, what should farmers do right now?
One thing I don't want to do is panic and get too down in the dumps. It's a frustrating time. I mean, this is not fun. But at the same time, one thing that I always encourage my producers to do is to figure your profit margins, figure your break even and then your profit margins at today's prices. And profit margins at today's prices don't look good. We know that, right? And so, you know what, figure them again if we do get a 25-cent rally, and it gives you some perspective. It tells you need to be doing something. You know, we talked a little bit about this, diesel fuel is as cheap as we've seen in 4 years. And so, heating oil, if a person wanted to put a hedge on, that's a pretty good place to go. As we continue to move lower, I mean, I believe we closed around $1.13 this week. I mean, that market is pretty deflated at this point. Can it go lower? Absolutely. But if I can lock in a lower cost, whether I'm talking fertilizer or whether I'm talking diesel fuel, than a year ago, that's a pretty darn good thing to do.
Tom, you said during the broadcast, lock in. I mean, there's an opportunity for some of these livestock people to get some corn.
Yeah, yeah. I think on any break, I think there is potential a little more down in corn. So I guess I'd be looking at the May contract in that, 353 to 356 range, a little bit lower than we're at right now. But yeah, certainly on these breaks, you need to look at that. And I agree with Matt on the diesel fuel. I don't know that you need to run out Monday morning and do it, but because it may take your supplier a little while for his prices to come down, and you can kind of negotiate that out. But you're certainly getting down in the range. You need to look at that pretty closely. And Roundup and fertilizer. I mean, watch your inputs. There's going to be opportunities for inputs that I think are going to be pretty good here in the next month or two.
Well, when we last had a run-up in prices, it was, well, there go the inputs. They go along for the ride. And so you're saying that there's the chance that the majority of them are going to lose some steam.
Yeah, some of them are tied to the petroleum markets, so that's going to create an opportunity.
All right, go ahead.
A person that didn't get all their fertilizer on last fall is smiling pretty good, actually, because their fertilizer costs in totality are lower than what we saw just in the fall, and definitely lower than a year ago. Now, I'm not talking sizable, and it depends on the region that you're in, but certainly there's some relief there.
All right, energy-wise, we understand Saudi Arabia and their influence with OPEC and the Russia debate. I mean, that was That was only 5 days ago that this all broke. It just seems like an eternity. But we do know U.S. oil producers, I mean, we've become a country that can make enough oil for ourselves. You talked about it, both of you, less demand for the oil. But let's talk about the Bakken regions, the shale oil regions. When we look at jobs, there's going to be rigs, I'm guessing, right? Shut down. Fields, we're not going to be producing oil. So this tail wags a little farther than just farm country.
Absolutely, and I think whenever people are looking, what are we going to do to shore up the ag industry? Well, the ag industry is not the only one that needs shored up right now, and so I do think that in the months ahead, obviously it's an election year, and a lot of people want to be pacified going into election year, right? But I don't know that there's enough money to go around to pacify every industry that needs it, whether you're talking the airline industry or whether you're talking the oil industry,
any of the tourism, ag, oil, banking.
I mean, you're gonna have to have a lot of money that I'm not so sure that we've got laying around.
Well, it's a little naive to think that that's strictly a Saudi-Russian issue. I think they've both not been happy about the competition they're getting from our shale industry.
Right.
And part of that is to put pressure on the shale industry in the U.S., and it got put on big time this week. So you could potentially be looking at bankruptcies that could spill over into the banking industry and the people that are financing that. So that whole oil thing is yet to be determined, the extent of the damage that's going to be done from that, I believe.
In the Bakken region, all the way back to 2011, I think the last time I was up there, they were like, they just always kind of felt that at some point that was going off a cliff. We sustained a sell-off a couple of years ago, but this could be a serious situation.
Oh, it is a serious situation. I mean, that's a serious drop in crude oil prices we had this week.
All right, we have another question here. I need to move us along a little bit. This is an opportunity, gentlemen. Nathan in Inwood, Iowa is asking, is this a re-ownership opportunity for the 2019 grain?
Well, there's two parts to that in my mind. One is the basis is pretty good. So if anytime you want to own the grain in the way that it's most advantageous to you, well, if the basis is tight, you want to move the cash market. Then the second part of that equation is, do I want to re-own it? I think if you break it hard, you probably can re-own it if your upside objectives aren't super high. If you're at the top end of the market and you're at a recovery rally point, then I wouldn't re-own it. So I guess that's talking out of both sides of my mouth a little bit, but I think it kind of depends on where we're at in the range of trading.
Yeah, I agree with what Tom's saying. The thing that I want to encourage folks to think about is sometimes, whenever you have a sale that you're not overly thrilled with and you want to make it better, by whether even buying a call, sometimes you can make a bad sale worse. And so I want to be careful there, because right now there's not much meat on the bone. And, re-ownership's fine and well, but I need to make sure that I'm calculated about it, like Tom's saying, first of all. And second of all, I'm looking for opportunities. So, like I told you earlier today, whenever someone asks me, when do you want to buy calls? I want to buy calls when they're cheap. I know that's a smart aleck remark to some people, but that you don't buy a call on an up day. I mean, that's not what I want to do. And so there's probably some opportunities in here. If we break this market hard in the next week or two because coronavirus continues, there's probably opportunities in there for re-ownership.
The other problem with that call thing is that we were running 14 to 15% option volatility on corn calls, and that's up to 22, 23 now. So they've pumped up the option volatility, made them more expensive to buy over the last week.
I was just going to say, did that
days.
just go up in the last, because I think the last time you were here, we talked about the volatility in that, and it wasn't there.
A month and a half ago, it wasn't bad, but that's been pumped up quite a bit, and it tends to work higher into the summer too. Now, whether it will this year with abundant supplies, I don't know, but it is creeping up on us.
All right, we have one more question, and Matt kind of talked about it. This is Paul in Montevideo, Minnesota. He's asking, how much more fear-driven are these markets, both livestock and grains, from this coronavirus going to go? I think you had an answer in the hallway earlier. I want to see if it's the same one you have. Do you need me to prompt you about that again?
Yeah, I need you to prompt me about it.
It was, I think, of the market factors in the worst case scenario.
Yes, absolutely.
Is that right?
Yes, I mean, typically, the market is going to look at a doomsday type scenario. We are fear driven, there's no question about it. But whenever it comes down to it, the fear of what could happen is most of the time worse than what actually does happen. Even if what we feared all along, because when the market finally quantifies what it is, that the problem is or the issue is or how bad the crop was, that's when you see the market turn around.
Right.
You agree?
Yeah, we almost always factor in the worst case scenario. You see it all the time in government reports. You're like, that was a friendly report. How come we went down? Well, it's because we factored it in before the report ever came out. So, it happens all the time, and I don't see that this is probably going to be any different.
Absolutely.
All right, last question. You guys both have a couple of years at doing what you're doing. Is this comparable to anything we've seen in recent times? And I'll let you go all the way. We have to remember 9/11 was 19 years ago already. Is this similar to what happened, worldwide global events impacting the commodity markets? Is it more what happened in September, October of 08 with the Great Recession? Or are we more at this is what happened on 9/11, both from an equity and a commodity market basis, where we just have things we cannot forecast coming down the road?
Well, 9/11 happened. It was a one event. A series of one events that happened fast. We kind of figured it out relatively quickly, and we popped back. The 2007 through 9 period was the housing thing. That was a slow, creeping, grinding, ugly kind of thing, and that took a long while. This is almost a kind of a combination of the two, where you've got the coronavirus, which is bad. It's going to have an immediate effect. Obviously, has had an immediate effect. It's going to take a little while to work its way out, but it's not going to take as long as the housing situation did. So I guess to me, it's kind of a hybrid of those two situations.
And I agree with what he's saying. And the other thing that I think that we've already talked about just a little bit before we came on the air is there's going to be some changes that are going to happen due to this coronavirus. And so you're probably going to see a little more elongated effect than what you saw with 9/11. But this is a tough one. When people ask us, and what's your opinion on when this thing's going to end? There's no good way to answer that. Because we don't know. We haven't dealt with this before. We've dealt with a lot of issues. We've never dealt with the coronavirus, though.
As of 9:30 Friday morning, in the U.S., we had 1,672 confirmed cases, 41 deaths. That was up from 25 deaths the day before. There's a hesitancy, cautiousness of people saying, well, there's not this massive whatever. That's a hard thing to discuss right now. And
we don't know that because there's no test kits out.
We don't know anything.
That's the problem. There's no test kits to really know that. And until those get distributed widely and used, we're not going to know. So that's just a wild
number.
Yes.
Yeah, it is. But unfortunately, that's the government CDC number from this morning.
Yeah.
And that's what we're going off of.
And, as we get out, and, I went to Commodity Classic 2 weeks ago. This week I did a little bit of travel. My wife and I have talked about this, and, a lot of people want to say it's overblown. But as we've mentioned, we have, people in our family that are susceptible. And so what if it's not overblown? And I'm not willing to take that risk. And I hope that people aren't willing to take risks. We all need to learn from this example. Hopefully we don't spread this around if we're someone that gets infected, because you don't know. That's part of the problem with this, that you don't know while you're still infectious. You don't necessarily feel bad. And
here somebody puts you on TV asking you a whole bunch of questions about stuff that's hard to straighten out. So I thank you two in a very, very difficult week for sitting through this. Matt Bennett, thank you so much. Tomm Pfitzenmaier, thank you guys. Yeah. I greatly appreciate it. I know the viewers do as well. So thank you so very much for joining us here on Market Plus. A reminder that many PBS stations are in fundraising mode. We do ask you to support your local station that carries market to market. You will be investing in the news reporting and timely market analysis you trust. Next week, we will be back, full-length shows, and we'll explore how experts are pushing the old grid system in a new direction. And Mark Gold will join us here at the Market to Market table. Until then, thanks for watching, listening, or reading. I'm Paul Yeager. Have a great week.